financial bad habit number 5 is just simply not investing. So when you come to your financial goals, when you go through your budgeting process in any capacity, and then you dive in and you say, hey, how much do we actually want to contribute to our financial goals? Maybe that's a retirement goal. Maybe it's not so much a number, meaning that, hey, I just know in retirement, I want to be able to travel. I just know that in retirement, my kids are all over the country now, and I want to be able to get to them whenever I want. You know, grandma wants to get to the kids' games, or grandpa wants to be able to help kids out with their house, whatever the case is. So maybe it's not even a specific number in mind. Maybe it's just more of the lifestyle, the activity, and the actions you want. Those things you still need to be able to support financially, right? And I mean, the fact is that, yes, you can save, but the money in the coffee can under the mattress, actually not under the mattress, that'd be really uncomfortable. But, the money that you just stuff in the house somewhere isn't earning you anything. It's not growing at that point in time. I mean, so when you look at it, there's 28% of people have nothing saved for retirement, and 39% aren't contributing to a retirement fund. I think that's pretty staggering.
It is. And I think that it kind of speaks to the priorities that people have or don't have. There's a lot of things that are fighting for your dollars, right?
That's right.
Maybe it's your mortgage, right? Maybe you want to pay extra on that. Maybe you're really not good with budgeting and you spend a lot on going out to eat, or vacation or travel or whatever it is for you. But you kind of have to make a decision, right? Like, what's the most important? And I think unless you've had a conversation with somebody who can help guide you on these things, like, do you know, is it more beneficial for you to make additional payments on your mortgage, or should some of that additional money that you have, should that go towards your deferred compensation plan at work? Should that go towards your emergency fund? How much should you have in your emergency fund before you consider making those additional payments? And I think that sometimes when you don't have these conversations, you end up doing something that you think is good, right? It's good to make an additional mortgage payment, but not to the exclusion of the retirement savings payment, right? So making sure that you have your priorities in order. And on top of that, not investing or just keeping your money in a savings or a checking account, which is, paying you very, very little, like that can have additional problems too, right? It's the opportunity cost, the cost that, that you miss out on. You don't end up getting that rate of return that you could easily have achieved, with other cash equivalents. If, let's say, you're not necessarily looking to invest in the market, but just, having another cash equivalent or financial instrument that's similar to that, where it allows you to maintain your liquidity if you need it for your emergency fund, and also getting a decent rate of return. We'll talk about this a little bit later. And actually, on the topic of some good news related to Social Security, I'll let Ryan handle that in a minute. But one of the reasons why Social Security even has a problem, why we're always asking, hey, what is the latest trustees report saying? When is the trust fund going to run out of money? One of the challenges there is, the average rate of return on the Social Security trust fund has been 1.4%. Now, obviously, there's a lot of issues with Social Security related to solvency. And the biggest one is the number of people paying in versus the number of people collecting. That's a huge problem. But imagine if it didn't average 1.4%, how much healthier would the fund be? The Social Security ran a surplus for I think 3 decades, and it wasn't until 2021. And I talked about this a few podcasts ago, where they finally had to begin dipping into the trust fund. And that's where the whole conversation on depletion is coming from. So Ryan's going to mention some good news on that a little bit later, but making sure that you are saving, making sure that you're actually weighing all the options, not just making a good decision because on the surface it seems like a good decision, but comparing it to other places. What would be the best use of my financial resources? What's the highest and best use of the discretionary spending I have that can be used, whether to fund my retirement savings or just investments in general, my emergency fund, various expenses that you do have, comparing the interest rates on those things. The same can be said of paying off your debt. Many of us, maybe you have student loan debt. Maybe you have, as I mentioned, a mortgage or a vehicle payment, or unfortunately, some of us credit card debt, prioritizing the ones with the highest, interest rates when it comes to paying those down, and a variety of other techniques that you can do to help get a handle on that.
Yeah, absolutely. If so far we've gone through some bad habits and you're questioning, do I have these things under control? Do I know what my plan is? Do I know what my goals are? If you're questioning that, we'd love to talk. We'd love to go through those things with you. Yelisey said it best just a moment ago. Sometimes just simply having a conversation with somebody other than, your spouse or, the people in your immediate circle is beneficial, right? An outside perspective sometimes is really helpful in figuring out where you stand in your financial goals. You can reach out to us anytime at 612-286-0580. Trey, Yelisey, or myself, we'd love to have those conversations with you. But